Okay. From this table class as contained in the framework, you're already given at a glance the definition of these items. Okay. Simply class, the definition of an asset is that an asset is a present economic resource controlled by the entity as a result of past events. This sentence alone is already the definition of an asset. Okay. Well, there may be others who would try to include the second part class. Okay, an economic resource is a right that has the potential to produce economic benefits. But this second sentence is actually a definition of an economic resource. This is not a definition of our asset. Okay, the second sentence here is for you to understand what an economic resource is. But if you're simply asked for a definition of the asset class, it is simply a present economic resource controlled by the entity as a result of past events. Later on, we will break down the definition provided for an asset class. For liability, it's a present obligation of the entity to transfer an economic resource as a result of past events. Then equity simply is the residual interest in the assets of the entity after deducting all its liabilities. Class, I'm not sure if you've heard already, the 2018, the latest version of the framework class changed the definition of an asset and a liability. But the definition of the equity remain unchanged from the, I think it's previous to 2018, we had a 2012 framework. Okay. There are interesting developments here, but I want you to understand, just because the framework changed its definition for assets and liabilities class, that does not mean that we will already be changing our recognition principles provided in the standards class. We would still follow the standards. As was discussed in the previous sessions class, the framework is not a standard. Okay? The framework is not a standard. In case of conflict between the framework and the standard, it would be the standard that will govern. Normally, on the part of financial statement preparers, the framework will come into play only if the standards are silent, only if we cannot use standards from other jurisdiction. We only use the concepts contained in the framework class if we do not have any other option on how to account a certain transaction or event. So, notwithstanding the fact that the framework changed its definition of an asset and liability, the rules contained in all the standards will remain in place. Okay? I am emphasizing this because by the new definition provided for assets and liabilities class, mere potential, mere chance of providing a benefit class, okay, mere potential or chance of being obligated to settle, obligated to transfer an economic resource would already constitute a liability. Okay, but the recognition principles or requirements contained in the standard are far more strict before an asset or liability can be recognized. And the reason class why the definition of an asset and liability is more liberal class, the reason why the definition of asset and liability is more loose class, because they are not limiting themselves only to the recognition requirements. They are allowing the use of the terms asset and liabilities class without limiting themselves to those assets and liabilities that are reported in the statement of financial position. Their use of the term asset here could pertain to assets that are not reported in your balance sheet, that are not reported in your statement of financial position, but are only disclosed in the notes to the financial statements. Whereas in the standards class, when we talk about an asset, we only pertain to assets that will be reported in our statement of financial position. When we talk of liabilities in the standard, it would mostly be for those liabilities that will require separate recognition in our financial statements, in our statement of financial position. Okay? But the use of the words assets, liabilities, income, and expenses in the framework class is a lot more loose than how they are used in the standards. Okay, they are not limiting themselves only to assets, liabilities, income, and expenses that are to be recognized. Okay, the assets that are being described here are not necessarily the same assets that will be reported in the balance sheet. if it has to be disclosed, class, if the information about this economic resource or this claim is beneficial to financial statement users, if they are disclosed in the notes to the financial statements, then such disclosure such should be made. That is why they are not limiting themselves only to your balance sheet or the income statement, class, because this is supposed to be used even for the requirements on disclosures. If you have seen an example of a standard already, class, towards the end, there will be a portion that provides for required disclosures. Since the purpose of the framework, class, is for future development of standards, since the standards will provide requirements on disclosures, class, then it is understandable that they would use the terms assets and liabilities even to those that are not just limited to items that are presented in the balance sheet or income statement. So they will be using assets, the term assets and liabilities, class, even to those items that will only be reported as a disclosure in our notes to the financial statements. Since information even to items that do not have to be recognized in the balance sheet, class, since information about them would still be relevant even if they are not recognized separately, class, then it is entirely possible for future standards to provide disclosure requirements. It is entirely possible for the standard to provide disclosure requirements. And that is why they are a lot more loose in the use of the terms assets, liabilities, income, and expenses. So changes in economic resource, class. There are two types of changes, class. Changes that are caused by the operations, that are caused by the conduct of the business, and there are changes that are due to activities from our investors, class. Okay. So again, if our resources and claims, class, change as a result of our performance, as a result of our operations, then these changes will be classified as either an income or an expense. Okay. But if the changes to our resources, class, and claims are due to the activities of our investors, our owners, class, our shareholders, then they are not going to be classified as an income or expense. Okay. They would come in the form of withdrawals. They would come in the form of additional investments, class. Okay. The second type of changes are reported in your statement of changes in equity, while the first type of changes will be reported in your income statement. So, just as a takeaway for today's lecture, class, as for the definitions of the elements of the financial statements, class, make sure you master them, class. They would be repetitively asked, and I am certain that these questions would be asked, not just in our examination and even in the board exam. So if you're asked for the definition of an asset class, it's safe to use the definition provided by the framework. Okay, it's an altogether different story, class, if you're asked for the recognition requirement for assets. In that case, you have to refer to the standards. But for the mere definition of assets, liabilities, income, expenses, then we can rely on the definitions provided by the framework.